We are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay, everyone, we are marking up the NAS100. So let's take a look at what's going on. Very simple. So the market started off back in NAS100 started off back in October of 2010. From there, let me see. So, oh wow, I actually see a pattern. I don't even know I see it. So what the market did, it came out of the beginning and it pushed up to the top. So I'm gonna demonstrate starting right here. So this will be the first leg, second leg. The retest happened and the market shot up 1, 2, 3, and it just kept going up 4, 5. Consolidate a little bit here. Oh, hold on, I see something else. My backspace ain't working, but in here is another double bottom right here. So first leg, second leg, third leg, fourth leg. That doji right here is that retest. The market came back to retest, and then we got that push up to the top, which happened here. And that red doji is another retest. Or 1, 2, 3. These three dojis are retest. So the market kind of consolidated probably for a few months up and down. So you'd have been buying and selling it within this area, and then the market would have broke this area of resistance, push up to new areas of high highs. You got a retest here, 1, 2, look like a double bottom. Market pushed up to new areas of high highs. Here go to retest, and then the market pushed up again. So it's all in here. I see another double bottom, because as the market going up, you're gonna see a whole bunch of double bottoms and things like that. So 1, 2. So there's another double bottom here. 1, 2. Yep, and that's this next double bottom is what made this market push up. And here we go right here. So the market, this is the first leg, second leg, third leg, fourth leg, and here go to retest here. Once that retest happened, the market pushed up to new areas of high highs. Boom. Here go pattern here. We got the bearish engulfing pattern. The bearish red candle engulfed over the green bullish candle, and the market dropped. It actually dropped back into previous areas of support. It wasn't able to break. The market created enough momentum and went up. And what happened in this area here, so what happened in this area here is, after the market went back to the support, we caught the bullish pattern, the bullish engulfing pattern. Green candle engulfed the bearish candle, the red one, and the market shot up to new areas of high highs. So right now the market has broke, created areas high highs here, came back to retest, created enough momentum for another push up to the top. So this is the highest ever the market has ever been when it came to NAS100. That's currently within the past few months. So within the past few months, the market has been consolidating. This is what March, February, January, December. So once December we got a big push to the top. It lost momentum, and then January, February, March, the market just consolidated sideways. So what I would do is I will wait for this market to break this area here to see if it's going to go up or go down. So already just looking on this time frame, I already know it's a waiting game. I can go in here, maybe take it for some trades, as in from the bottom, take it to a buy and sell and buy and sell. But right now I don't know. I gotta look at down time frame to see if I can do that as well. So right now I'm going to clear my screen. My backspace is not working. I got to do a full removal of drawings. Okay, so back where price action is, we know that the market is in a uptrend. So let's mark this up to see what's going on. Highest highs here, and we're going to grab this area here when we do our rectangle. But for right now, let's grab our trend line, and we're going to place our let's grab this either here or here, doesn't really matter, because at the end of the day you're going to still bring it up. I kind of like that long distance pull for some reason, and I also like to slice through. I like that leakage. I call it leakage. So I like that drip. I like it to drip out so I can kind of see. Some people get alarmed when they see their trend lines. When they see their trend lines, when they see candles break their trend lines, they start, oh, the market's going to turn around. But at the end of the day, just wait for the pattern to do what it do. Because once the pattern do what it do, you can take the entry. So we found our overall trend was an uptrend. Now we'll be looking for SR lines. So the SR line is going to be extremely minimum here, because there's really not really much to mark up, because we already know, as in SR lines, because we already know that everything to the left is really nothing over there. So what we can do is just grab so let's grab this. So price action is here, so we're looking for price to break, let's say the top of this here, and I may have to mark this up a little more than just 3 SR lines. So once price break this, there's really no buys or candle to grab. I think the only thing I can grab is these wicks. So the next wick we'll try to break is this area here. If price would go down, how far would it go down? I'm going to stretch this out so you can see it. So price is trying to break this area here between this red and green area of these bullish and bearish candles, because that's the consolidation area that is in. And once you guys go down the lower time frame, you can see. I'm going to add one more just to, because I don't know how it's going to look on a lower time frame. And when it's a lot, when the market has reached new areas of higher highs, the markups is definitely different from here. So next breakout probably be, if the market drops, it can drop that low. Also, I feel like there's something going on in here, so I could clip this. It just feels right, but if it's not, it's fine. But there's it's a real wiki over here, so it's gonna be some pitch stop somewhere in here. Like I said, if I mark it up wrong, I figure it out. It's practice. Okay, so we can see that price is respecting our SR lines, where price broke up to new areas. Price broke our SR lines, came back to retest, to shoot up higher, to break down, retest, to create new areas of high highs, to come back to our support area. So within the let's do a top down analysis within this to see if we can grab some more SR lines. So we're going to do a top down analysis. We're looking for peaks. I'm going to stretch this out because I can see that something's going on in here. I'm going to grab this area, this peak area here. Also, I'm going to grab this inverted peak area here. I'm also going to grab this inverted peak here. And we have something else, because price action is actually up here. So we're looking for price to go up and respect our line, because it came down to come up, to come back down. And so the market does look like it's respecting our uptrend. So it's going to be from here to, hold on. There's another inverted, there's another peak. I almost missed this, so there's another one. Something's going on in here, and we can see it because our wicks is touching it. It's never perfect, but you're gonna get the idea of where these wicks are going. Like this wick, this bearish candle, this wick touched this highest SR line here. The second one reached our SR lines here, so it's definitely well respected. And then, you know, you're always gonna have some breakthroughs. So this one broke through this SR line and tried to reach this one. So you can see that something's going on, and so it's looking right. Also, there's another inverted peak here, which may not be necessary for us to add because we are in an uptrend, but this area is below, just in case it does break lower. It can go right here. Well respected from where the price reached areas of high highs here, and it finally came back down to retest, and then it came back to retest again. So looking real well. From there, we got to identify to see if we can see a pattern. So the pattern is going to happen. The pattern can happen somewhere in this area here. So we're not going to grab the highest high all the way to this lowest low. The market's going to take a while for it to get back up there. So what we're going to grab is, let's grab this area with price action at. We can grab this. Let's just grab some of these wicks here, and we're going to draw it back down to price action lowest low wick, which would be it actually went too far down. I'm not going to go that far down. I'm going to just grab the price action wick, and that's enough for me. So I feel like once the market pushed up and came back down, whatever the market's going to do is going to identify itself in here, and we're going to see in a lower time frame. So let's check it out. Well respected, well respected. So I'm going to explain to you guys what I see, or what we see. This is what we see. We see our favorite pattern, one of our favorite patterns, right? We see the double bottom. There we go. So I'm not going to mark it up with the red because my screen is glitching. So we're going to just kind of play it out with my mouse. So from here, this is the first leg coming down. This is the second leg coming up. This is the third leg coming down. And it's the fourth leg coming up. So that's the double bottom. And then we got the retest that happened here. Now we're looking for price to come back up. There's actually multiple double bottoms in here. I just showed y'all one. Another one will be 1, 2. So another one will be here. 1, 2, 3. And we're looking for the market to push up. Okay, so it's multiple double bottoms. When you start seeing them double bottoms in these our rectangles, and definitely around the area too, we can see that eventually the market is going to try to come up, and that's exactly what it's doing. So right here, it is a pattern, which is the bearish, the bullish pattern is engulfing the bearish candle. So the candle, so when this retest happened here, the retest was a doji, so the market was indecisive. A doji standing for indecisive. Indecisive meaning the market don't know what it's going to do. So most of the time when the market is in a, let's say, downtrend, as in this area right here, so we can see 1, 2, and also the third candle is bearish. It's showing that the market is pushing down. But once you get that doji, it may be turning around to the upside, in which you can see some type of confirmation here because this green candle is forming. Okay, so we do see that the market may be turning up for that double bottom. First leg, second leg, third leg, fourth leg, retest will happen here. Boom, out of here to new previous areas of high highs. So price look like it's trying to return once it get here. Once after here, it'll come here, then it'll come here, and the next level will be here. So definitely trying to return back to previous areas of higher highs. So right now it's a waiting game. I mean, we see that what the pattern is. 1, 2, 3, 4, retest. So this looks like entry. This green candle, when this closes out, and also you can see that the market may not break down because it gets wicky in this area. And as wicky as in there's a red wick here, there's a green wick here, there's a red wick here, there's a green wick here, there's a red wick here, and there's a doji here, and this is a doji as well, a doji right here as well. So when you start doing these dojis and these wicks, it starts showing that price may not break this section here. Okay, and once we have this bullish pattern closes out above this bearish pattern, the market can shoot up. So this looks like a clean entry right here for us to take it from here to the next area high highs, which would be this TP here. If it breaks here, go here. But it's an amazing trade. So let's take a look at the pips. And also, guys, we do trade the breakout pattern. I'll mark it up over here for you guys. And the breakout pattern, the breakout retest pattern is exactly what this is. I'm gonna scoot my screen over. Okay, so I'm going to demonstrate the breakout retest pattern, and that's basically is, let's say the market started off, so let's say the market started off at the bottom of this lower low, and it heads up to our resistance line. So once the market starts moving up and it respect our trend line, we do not look for entry once the market reaches our resistance. We wait for the market to break out. Once it breaks out, the market always come back to retest. Once the market, or most of the time, it come back to retest. Yeah, always, because it has to come back to retest because it creates that support. So let's say it always come back to retest eventually. Don't get me wrong, it can break about 2, 3, 4 SR lines before it come back down, but no matter what, it's coming back down for sure. And that's what create that lower low to high highs, and high highs to low lows. So once the market came down to this SR line, which turned into support, the market, we would take entry here and take it to our next SR line. Okay, So once again, once the market gets to our SR line, we will not take an entry. We'll wait for the market to break our SR line. Let's say it breaks 1, 2 levels. We wait for the market to come back down and retest. And once we see that retest, we take entry. Once we see the confirmation, and then we'll take it to the next SR line. And we'll take the trade. Once again, we wait for the market to break the SR line, come back to retest our SR line, take entry. That's the trade. Okay, so let's go back over to price action and let's see if we can try to find out if this market is really going to do what it's going to do. Will we receive the pips within this trade? So I'll actually take this trade. This trade is great. So we already got the engulfing pattern. So we already see that price is respecting our line. We see the double bottom forming. We can see clearly this is going to push up. So once this market closes out on this, I would take this trade to next area higher highs. Boom. You know, because that's what price is trying to return. If you don't want to take it to that area higher highs, you don't have to. You can take it to your SR line. So after that breakout, the next SR line will be these two here. Let's take it to this, the second one to the top. So let's grab our long position. So within this candles here, we can see probably what happened was market broke out of SR line. It came back to retest. We look for entry and take out to the next SR line. Because these two SR lines are so close, we can just take it to this one right here. So entry will be here. The next SR line will be here. Go down lower time frame, tighten up our stop loss. Okay, so this is where it gets tricky with a trade like this. So there's no way to, we have to extend this stop loss a lot because certain pairs, it gets very wicky. So even with this body of candles up here, we can see that the market is definitely going up because it's definitely engulfed. Once it closes here, it's definitely going to go up to the next level. So this is definitely a trade. So actually, the TP wouldn't be here because as I went down the time frame, I would actually set my TP here. So let me show you how we actually extend my TP to a next level up at higher highs. Because when we did go to time frame, if this closes out just like how we see it, it already broke this level. Now it's going to reach the next level, which is great. And it also is respecting our trend line as well. I know I got a little leakage, but it's definitely respecting our trend line. For the stop loss, because this market wicks are so long, we cannot pull our stop loss. Let's say we can see that price actions here. So you wouldn't pull your stop loss, under, let's say the price action, because it'll stop you out with that wick, and then you wouldn't even put it to the next support line because you'll still get stopped out by that wicks. The wicks are too long, and then you go down further, you can still get stopped out. You go down further, you can still get stopped out. So you got to go below that wick. So I would go probably, let's say right here. This is clean enough for me because if the next don't get me wrong, you can still get stopped out here. Even if you get stopped out, don't be afraid to get back into entry. Okay, so I'm explaining to you guys what's going to happen, what can happen. Let's say the next candle formed green and it comes up. That thing could drop a wick all the way back down to our stop loss and take us out. So you always want to make sure your stop loss is extended and it's not about just paying attention to the bodies. You want to pay attention to these pairs that drop these long wicks because it can knock you out to trade. You don't want to get knocked out to trade. I mean, you can get knocked out to trade, but as we know, we're in an uptrend. If you get knocked out to trade, do not get discouraged about the market. Don't get discouraged about trading. Create the confidence and just a fine re-entry. Okay, so this would be an area I would stop my stop loss. This is an amazing trade. We're looking at what 25193 on the way up for a TP, which is an amazing trade. If the stop loss go back is 16956. That is an amazing trade. 120, so 251 pips up to the top, 169 pips to the low. That's an amazing trade. I would definitely take this. Okay, and just wait for this pattern to close out and take it to the next level. But as well, I know I set this to my Forex 101. We're gonna give you a little insight on what's going on. Even though I set my TP here, we can see that this whole cluster area here, this is what price is trying to head back up to. Not all the time it may come up to this TP. It can shorten itself a little. It can halfway mark. It can come up to this, these dojis, but with the confidence that we know, we do feel like it's going to go up here. Always, you always want to, if you guys take trades, Forex 101, if you guys take trades, you put these trades out, and you really don't care what you see. You care what you see, but if you set your TP and your stop loss, and you don't want to watch it again, you don't have to. If you that confident in what you do, that's how confident I am. I set my TPs and stop loss. I don't watch it. I let it go. Because if you want to set your TP and stop loss, you shouldn't be in the market saying you can, but my personal opinion, you may not want to be in the market and be like, oh, I don't know if it's going to go back. I don't know if it's going to go back. There's a reason why we set our stop loss and TPs, because this is where we feel confident. If it goes back, it goes back. At the end of the day, we know we are still in the overall trend of an uptrend, so we just look for re-entry. Okay, everyone, this is Cam Jones, FX Area Analysis. Thank you for watching and thank you for your attention.